Talk to me about the structure and why this is different and why people are taking note and why perhaps they should be concerned.
The necessity of a variable interest entity structure is to get around the Chinese restriction on foreign ownership of certain industries, which include internet. So companies starting with Sina Corp in 2000 have been using this structure without too much of a ruckus for investors. However, no company, of course, has gone public that's as big as Alibaba. So it's drawing attention to these VIE structures and the riskiness, and the risk lies in the fact that as U.S. investors or investors anywhere else, you're buying into you're buying shares of Alibaba through a contract rather than direct ownership, which of course gives the Chinese government the ability to essentially revoke that license, which could cause U.S. investors to lose their money.
You know, Mia, they're saying that this one is just so cheap. It's one of the reasons why they can't ignore it. And when they compare it with other Chinese companies, the valuation just looks incredibly attractive. But is there a reason here for the discount?
Well, one of the reasons for the discount is the fact that you have someone that you can bet on, right? You have someone like Jack Ma that many people say is a man that is going to be able to turn this thing around. And many also say that the reason it's priced the way it is because they want to avoid what happened with Facebook earlier.
So maybe some deliberate depreciation in the price.
Trish,
so that
I want to go back to that VIE comment because I thought that was really interesting because just so our viewers know, China in the past has said that a VIE structure has been illegal, and so they could step in again and do that. You know, they did it with Minsheng Bank a couple of years ago.
You know, I think the real reality in all of this is this risk of the Chinese government, and perhaps, you know, in this clamor to be part of the Chinese growth story, investors are ignoring the reality of this risk, and that's that you're putting your fate essentially in the hands of the Chinese.
There was a really interesting Bloomberg View column today out on this very topic where you look at the Chinese government and how much it's helped Alibaba, right? It's allowed this company to be virtually a monopoly when it comes to internet and e-commerce in China because it's allowed it to grow as big as it did while thwarting other competition such as Amazon and eBay in the region. Now, on the other hand, the Chinese government can say at some point down the road that, you know what, Alibaba, we don't really like you anymore. We don't want to help you succeed anymore, and do things like revoke these licenses for VIE structures or allow more competition to come in the region. So there is so much pressure put on the Chinese government in terms of what they can do to impact this company.
Yeah, and there's also a lot of bubble talk going on. And, you know, you and I have discussed it before, Leslie. In the first 4 months of the year, you basically saw as much money as all of last year raised on the IPO circuit. You probably have an update on those numbers, but it is in some ways looking a little bit frothy. And the idea that fund managers are saying, okay, this one's too cheap to ignore, I got to buy it, and they're ignoring some of those risks, does that suggest too much optimism? It's
interesting because from a fundamental perspective, this company is solid. I saw James Gellert on TV earlier this morning talking about the financial health of Alibaba, how stellar it is. They're profitable, their margins are amazing, their growth is amazing. So from a fundamental standpoint, it should get a decent sized valuation based on that alone. That said, the fact that investors are ignoring these pretty significant risks shows that they're in it for growth. Any way to play alpha in this market and to get that outsized performance is something that investors are going to go for because the markets are so hot.
And to really understand the prospects for Alibaba, you have to look at the prospects for the Chinese economy. Number one, it's the second largest in the world. Number two, it has a growing middle class. And number three, it's managed. The Chinese economy sets their growth target, and guess what? Usually they hit those targets. So if you think that they are, quote unquote, in bed with each other, keep in mind that Alibaba and the Chinese government work very closely. But at the end of the day, China knows what they're looking to hit.